All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about Corsair Gaming. Is that the king of the meme stocks? Is it actually a good value found by meme investors? I don't know. We'll see. We'll find out.
If you like this kind of the stock entertaining content, go ahead and give us a like and subscribe. We're just two average guys trying to figure everything out. So,
all right, with that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right, buddy. Hey, you own any Corsair products?
all right.
Yeah, nice. I know you built your own PC. You have internal components from Corsair too? Memory, maybe?
Actually, I think my RAM is.
Yeah, exactly. I have a power supply that's Corsair in this, and we both filmed this on an Epic Cam app on our iPhones, which is another Elgato product, which is a subdivision of Corsair. Corsair.
Oh yeah.
Yeah.
I have a Stream Deck too.
You have a Stream Deck, yeah, exactly.
Yeah.
Yeah.
Right.
So you have definitely some familiarity there with Corsair products. This is Corsair's chart from since they made their IPO last year. They kind of got this nice like squeeze up here, but then kind of a slow descending, kind of graph since then. This chart there since then. One of the questions is like, is this actually a good investment from a value standpoint? That's what we're going to try to answer today. So they still have about a 6.3% short float. So there's definitely some investors out there that think that Corsair is overvalued, despite the fact that you're looking at a forward PE right now of 14.5. Pretty impressive, right?
That is pretty. And they IPO'd in October.
It was October of 2020. Yes.
Okay.
So prior to their IPO, they were owned by this company, Eagle Tree Capital. They actually purchased them back in, I think it was 2015 for 525 million. Sounds pretty sweet, right? They basically, 5x their money in 4 years.
Yeah, that's
right?
that's a pretty great deal.
Yeah, one of the reasons for this kind of downward slope of Corsair stock chart is that this Eagle Tree Capital has been, selling off chunks of their shares. They still are actually the majority ownership. I want to say it's like 57% or so, something like that, of Corsair Gaming stock is still owned by this Eagle Tree Capital. They've been just, like I said, selling off chunks throughout the past several months since the IPO. So
they got to make money, right? Okay. Otherwise, they didn't 5x anything. It's just sitting there.
Yeah, exactly. If it's just like a paper profit, is it a real profit? But you're going to have some downward pressure probably for at least a while. There's a debate about whether or not they're just trying to take themselves down to a bare majority ownership, 50.2% or something like that, or if they're going to go ahead and just like continue offloading their position thereafter. So they'll give you an idea of what the timeline is as far as like how long they have the selling pressure. So Corsair, they're a computer gaming peripheral kind of company, and also computer components, but they're pretty widespread in terms of the product categories in which they engage in, and they have a pretty good position within all these product categories. They're for the most part in like a dominant position, right? So that's pretty cool, right? Yeah. They're like a good brand as far as what they're delivering to customers, that they have good brand perception there. Pretty broad categories here. This is kind of like they're showing like what a full gaming streaming setup could be utilizing their products. They're hoping to over time kind of integrate their products more in like almost like an ecosystem and then eventually have a subscription-based products line there. That is many years away, and honestly, like that's not something I'm willing to pay for. Yeah, I know, right? Dylan's cringe face tells me, I don't know.
I don't like that at all.
Yeah, I from a business standpoint, I think I get why they're trying to do it. I just don't see that happening anytime soon. The integration of their products, I think, is definitely something interesting. From Dylan and I's perspective as YouTubers here, I get the idea that you want to have all your products work well together. You want to be able to just turn on your system and be able to shoot a video, right?
Yeah, the good part about PC building though is all you really need is the components. They all kind of work together regardless.
Yeah,
like a Corsair mouse and like a Razer mouse it's not gonna work any different. They're gonna work the exact same.
Yeah, Agreed. This is one of the things that like why the folks over on like Wall Street Bets are really excited about Corsair Gaming. Is just their revenue growth has been phenomenal, right? You're talking about this is from the first quarter of the last 3 years, 47% CAGR, compound annual growth rate. If you didn't know what CAGR meant there, Dylan, which is fantastic. But a lot of the question is how much of this is just kind of pulled forward by COVID, because obviously that they gave the entire gaming industry a hell of a tailwind, versus like how much of this is actually going to be like sustainable growth. That's what
did you try to buy any PC components during COVID?
Yeah, it was challenging.
It was a nightmare.
Yeah.
So that is going to be very interesting because everything was marked up like 25%. At one point we ran out of monitors. Like it was an absolute complete nightmare. So I think that maybe this isn't as good as it looks come 1 year from now or 6 months from now, the first quarter of 2022.
To a degree, yes, obviously, and then like that was part of the reason why I'm sure EagleTree decided that this is the time to go ahead and IPO this company.
Yeah, probably.
They're going to get a few years of growth all of a sudden at once and be able to get a little bit of higher premium. Same thing here. We're talking about the profits. Same, even more impressive kind of growth here because I didn't put a slide in here about this, but you actually saw not only the revenue increasing, but the margins, the profit margins on all these components being increasing. Some of them up to like 10% or so above what they were selling for previously. And then, like I said, this is just kind of showing that continued growth, really impressive growth. I mean, phenomenal AMD-esque growth. It's just a question of whether or not this is going to continue.
AMD-esque growth.
I know, right? But see, the difference, if you see our Intel versus AMD video, is that with Corsair right now, they're growing at an AMD like, kind of trajectory, but they're not selling for an AMD like premium. Yeah.
I'm withholding my negative comments.
That's all good. And this is what I was talking about here, that the gross margin was up across the board, basically, over the last couple of years, partly due to that kind of shortage from COVID. The real question, too, is Corsair does have a lot of brand special kind of deals with a lot of esports folks in order to, use their products. Yeah. They use the influencers very well here on YouTube. So they have a good team as far as getting their brand value out there, and I think they will be able to continue to demand a bit of a premium for their products. But it's like I said, it's the question is you got to look at the financials here. So pretty impressive growth, right? 937 billion, million in revenue, all the way up to 1.9 billion dollars for the trailing 12 months here. This is from Yahoo Finance. Really good there as far as that goes. And then also you saw this really impressive growth in terms of the operating income from, this 21 million all up to 212 million. So, the operating income is like 10x over like 3 years, which is absolutely ridiculous.
That's really good.
Yeah, exactly. And, a company from the financial standpoint is in decent shape. They have about $130 million in cash right now on their balance sheet, $330 million in debt. That's what they're using their free cash flow right now for. They paid around $30 million in debt off in the first quarter of 2021. So they're making financially responsible things as far as, using their free cash flow so far. They don't pay a dividend. They don't do a share buybacks at this point yet.
Which is probably why
EagleTree.
That's probably why they're selling it, because they're sitting on all this 5x of their money, but they can't get any of it back. So, it makes sense. You want to sell. There's no dividend. You're not earning anything in your shares. So.
Yeah, I completely understand it. So, the question for me is basically, what do we model Corsair Gaming for in terms of future growth? Like that, when we do discounted cash flow, it's this growth that really matters. And I use the Yahoo Finance kind of growth rates here. Corsair, they're giving 10.6% here, which is Turtle Beach, 16%, and then Logitech, 30% annual growth rate is what they're expecting for the next 5 years. And Logitech, I thought, was honestly a better competitor than Corsair in terms of what they do in their product mix. Logitech obviously has more of a enterprise kind of focus, but they're still very much involved in like the high-end computer gaming kind of space that Corsair is as well. Dylan talked a little bit about Turtle Beach with me the other day about how they're more tied to console gaming, and they're seeing a little bit more of a pull forward because of the new launch of systems last year, but it's a question of how long that will be sustainable because console gaming is largely being replaced in Dylan's eyes, at least, he said.
within the next 10 years. I'll get to that at the end.
Yeah. Okay. So you want to add that stuff at the end? All right. So I did the discounted cash flow here. This is what they earned for per share profit last year was $1.14. This is what they're predicted to earn for 2021 was $1.81. I used a 10% that was the Yahoo Finance number and brought that out for the next 5 years, and then brought it down to 5% for thereafter. I used a 10% standard rate of return for the S&P 500, and according to that, if you used last year's numbers for financials, this little tile here on the left, they're approximately fairly valued for a 10% return, which is good.
They're at about $30. That's pretty good. That's
a market average, right? Is a 10% return. If you actually use the $1.81 that they're predicted to earn for 2021, now we're talking about a fair value of $47 a share based on discounted cash flow.
Right? Okay.
Yeah.
But that's with the inflated numbers, in my opinion, from COVID, right?
Yes. Yeah. Okay. Exactly. Yep. And now I did the same thing, but I used a 15%, a little bit closer. It was a little bit less than the Turtle Beach number, but still half of what Logitech is predicted to grow. And you're looking at a fair value here of $36.42 a share, with trying to achieve at least a 10% return. So you have a little bit of a buffer, about 20% or so beneath what the actual book value should basically be, or discounted free cash flow value, if you're actually going to see a 15% annual growth rate, which is more in line with some of the other competitors.
Okay, I mean that's double. So
yeah. So I kind of averaged the 10 and 15%, and then I gave it a 30% margin of safety. So that would give you a $23 per share price, which is below where it's trading right now. But margin of safety investing is all about doing the discounted cash flow, having a reasonable estimate of what you think the company's going to do going forward, and discounting them back for any errors and unforeseen circumstances, whether or not you see cloud gaming on the rise, and cloud gaming is predicted to be the $8 billion market by 2025, and what sort of effect that will have on people's need for a high-end home gaming PC like Corsair's products kind of deliver.
Right.
And I did another one here using this, the 10 to 15% CAGR average with $1.81, which is what 2021 predicted. So if you predict what 2021 what they're going to make for earnings is $1.81 per share, if you think they can continue to grow that at 10 to 15% on average per year, you're looking at an actual 30% discounted price here of margin of safety price of $36.71, because the actual fair value would be $52. So if you think 2021 represents a base good year for Corsair going forward, and they continue to grow at 10 to 15% per year, then at this point this would be a pretty solid deal. If, like I said, that's the big if you think that this year the 2021 numbers represent a solid kind of base for Corsair going forward.
Do you think that? That's the number one question.
I don't.
You don't?
Yeah, my inclination is no. These products that they sell, although they're good products, they demand a premium, and I respect that. These are not products that you upgrade very often, right? Like I literally have a power supply down in my basement on a gaming PC that I built back in 2004, and it still functions.
Okay.
Yeah, this isn't an iPhone with a 3-year upgrade cycle.
Oh, okay. So here's the difference. Vinny's not a gamer, he doesn't have all this kind of insight into the game community. I am a gamer, so when you say Corsair, it's fairly unanimous. Everyone just thinks memory, like the DRAM, the RAM, and all the 3200 megahertz C16 memory kit, all that kind of stuff, right? So,
I'll say that's one of the lowest margin products, actually.
Yeah, well, what's funny is when you hear Corsair, that's what you think. Because honestly, the reason why it's lowest margin is because it's, in my opinion, best quality for the price. Okay. It almost can't be beat, right? Another thing is console gaming going to be around for a long period of time? If not, PC gaming is going to continuously increase and start taking market share, right? So one, Vinny's analysis is over. He gave you everything. If you have no interest in gaming, you could just end the video. That's fine. I'm just going to give you some insight. So basically, real quick, it's not wasting anyone's time. Vinny, are you buying this company or no?
I am not. I'm going to continue watching it, but I am not buying it at this point.
What price does it have to be for you to buy it?
It would be like $23 a share, somewhere in that ballpark.
Okay.
They report earnings this week. So I was thinking about doing a little bit of a call spread in case they get like a really good earnings report, though.
Okay. All right. So there's Vinny's thing. If you want to shut it off, you're good. So console gaming. All right. So basically, console gaming is obviously huge for the last 20 years. You can, I don't think we have any PC gaming, console gaming fans, so there's not going to be a flame war, which there always is whenever you bring this up. But essentially, an Xbox between like 2000 2010 was like the fifth of a price of a gaming PC that could get you where you needed to go. Okay, the next generation Xbox, the good one, is $500, and PC gaming is doing the opposite. You can get a pretty good PC that can handle everything you want for like $900, $1,000, right? So the gap is closing, and this generation that's supposed to last 10 years of console gaming is probably, in my opinion, the last Xbox. Okay. I thought in 2015 they do one more, they'd probably do great, and then they do PC gaming. Not to mention all of Microsoft Studios stuff is now also on PC, and now you can play PC with Xbox. You can't do a PS5 because they don't like fun. Don't even get me into that. But Xbox and PC can play together in most games now. So, in my opinion, this is a vast growing space that's not being appreciated for the growth potential that it has.
Interesting.
There's my rant.
Yeah. So now I'll put you on the spot with this. Now, given the numbers here with Corsair and your feeling about kind of gaming market, are you a buyer of Corsair?
I have a rule where I won't buy IPOs until they've been out for like a year.
Yeah.
So I could look at that in October, but in my opinion, during what I think is going to be a crash within like the next 6 months, I do think that they will be hit harder than others, and I think that it'll be a good buy. I think that maybe they can get to around $18 a share. I'll throw a pretty gross amount of money at it.
Interesting. Yeah. Yeah, I think one of the real questions is to watch the Eagle Tree and when they stop selling, because that'll eliminate a lot of downward pressure on the stock.
Mm-hmm. Yeah.
The fact that the stock squeezed too is hilarious to me because at the time like Eagle Tree owned like 60% of the shares. Like, how can you squeeze this thing? Eagle Tree would like gladly sell this to a hedge fund.
Yeah. I'm gonna guess no one knew that when they were investing. That's also why I stay out of IPOs. If you're a PlayStation person or Xbox or PC person, these are just my opinions. I don't think we have any of those followers. It's not our target audience, but all right.
Yeah, all right.
Might be a flame war in the comments. So,
all right, guys. Well, let us know what you think about Corsair down below. We'd love to hear your thoughts.
Have a good one.